These days, all the analysts are talking about a correction in the US market, about the imminent drop of the S&P 500 index. Boom, the era of easy money is over. But let's be honest, that's just background noise you need to ignore. There are always opportunities where you can earn well and fast. In this video, I'll show you 3 top ideas that can earn you up to 60% by 2026. No complicated schemes, no unnecessary restrictions, only specific opportunities that you can take advantage of right now. My name is Dmitry Abramenko. I've been in trading for over 15 years, and I only work with things that actually make money. Let's go. The assets I'm about to show you are known to everyone. And it's not Bitcoin. I monitor them constantly. And right now is the moment when strong signals have formed in them. And all of this is tied to events in the Middle East because of Donald Trump's actions. But remember, if you plan to trade on my idea, the market won't wait. You need to act quickly. Idea number 3, which I expect to play out in the second or third quarter of 2026. The potential for each stock is roughly 20 to 30%. These are the largest US companies in one way or another connected to the development of artificial intelligence, and they are nearing the end of their growth. Yes, indeed, this year I expect a good and strong correction in the S&P 500 index and in the American market, but still. There are assets that haven't finished their growth and will reach a historical maximum. And before the reversal, you and I can still make some money. Pay attention to the chart. The first company is Google. Here you see the period from 2023 to 2026. And at the moment, wave 4 is forming for us, with a correction range from 23.6% to 38.2%. That is, the range is from $271 to $301. What do we know about corrections? Corrections should be formed in threes. And if last time it was a moving correction, this time it definitely is. We expect a similar three-wave pattern to form during our fourth wave. As the current movement develops, we expect a three-wave pattern to form, and after it is completed, we participate when the maximum is updated. A signal to enter and continue the trend will be a breakout of the trend line drawn from the maximum. This will happen through an intermediate correction that will form in the process. If we assess the potential based on the current levels, the current prices that have formed, then we only need to pay attention to 2 targets. These are $358 and $388 per share. In the process, you need to understand that we might finish the correction prematurely. It is not necessary to form such a large-scale three-wave pattern as before. To do this, we need to form a local consolidation and a breakout to the upside, which will also serve as a potential entry point for us. That's why I'll mark it additionally in blue. Basically, that's the entire idea we need. There's only one more thing you need to know here. In what case will the plan be cancelled if something goes wrong? For this, let's open the indicator section. Find the regular simple moving averages, add them to the chart, and set the values to 100 and 200. So to begin with, we will definitely need 2 specific technical indicators that will help us accurately determine exactly where our cancellation level is located. Manba. In other words, if we carefully place these 2 indicators on the trading chart, we get a certain well-defined range within which even the deepest market corrections can potentially develop and unfold over time. This range provides us with the necessary buffer to observe price action without making premature decisions. It looks like this. So, during a correction, our indicator will gradually adjust even in the case of a sideways market. And as the price develops over time, the price should not go beyond our 100-period moving average. That is, the nearest moving average, which will serve as a signal for the continuation of the trend. That's all you need to know here. Let's move on. The next company we have is Micron, which also interests us as part of the continuation of the trend. Here too, we are seeing the development of a fourth wave, and just so you understand, this is merely an intermediate correction in some of the stocks. In other words, the American market has split into 2 parts. Some of them have already completed their movement, and in fact, this is pushing the S&P 500 index down. Some of the assets are still ready to make one final move towards updating their historical highs. And so in fact, the second company is Micron, which is forming similar targets. Wave 4 is in the range of 38 to 23%, or in price terms, that's $331 to $385 per share. Here, inside a 3-wave structure should also be formed. I'm marking it in red for your convenience, and then as this 3-wave structure forms, we plan our movement accordingly. Here we can also use skewed pitchforks to determine the range, meaning we shouldn't go beyond our boundary. So more or less that's the 360 to 350 level, and right here is the moving average we just talked about. And then we work towards updating the high. As a minimum target here, we have the initial signal line, that is according to the pitchforks. We also continue to use this as a reference point when setting our targets. And next we consider the scenario. Reaching the 530 mark is the second idea, which after the correction is complete will also be available for buying to update the high of wave 3. The idea we're looking at today from the stock market perspective, this will be the company Dell, which is currently in a strong movement and deserves our attention. Here we no longer need the moving averages, since the movement has formed more transparently, and when we open the weekly chart, we see the following picture. During the formation of the 2024 to 2025 correction, we had volume zones established, the main one to which the price later returned and where an intermediate correction was formed. The signal here was given back at the 142 mark, but the targets have not been reached. The minimum target according to the pitchforks, if we use them as a reference, is at 202.81, and this is the first target to focus on. But if we take Fibonacci levels into account, the nearest one is at 240. That is, here our potential lies within a certain range, from 30 to the next mark, from 162% to about 50% for this stock. In other words, apparently Dell as a company has basically just entered its stride, its upward trend. There is good potential here to join in, to monitor trades. You can either enter at market price with a stop beyond our equilibrium channel, meaning there should be no reversal here. If a reversal does occur, that would already mean our scenario is cancelled. This can be stated right away and marked on the chart. And on the other hand, we are also interested in any trade that is based on a correction. In the case of a local three-wave pattern forming, we use these threes to join in with modest targets. That is, first aiming for 202, then for 240, and in this way continue to act further. Overall, the last thing worth mentioning here is the situation regarding how this growth will develop. That is, if you pay attention, all the movement inside is forming with periodic pullbacks, which means that in the process we will also see pullbacks happening in the same way. And in this case, we are using this as our reference point. First of all, we focus on local threes, consolidations with minimal corrections. That is within a range of 23 to 38% in order to join the next target on our higher time frame chart. So right now I'm showing you medium-term forecasts, my plans regarding the targets. Next, all that's left is to find specific trades. Block number 4. It's easiest to just open YouTube and look for ready-made ideas. It's harder to get started, to think like a professional. If you're ready to move to the next level, I've created a unique PDF guide for you about finding trades, how to make trading decisions, and how to trade systematically using real-life examples. This is something that usually neither traders nor investors show. Only practical logic. Download the guide below this video, study it, and start earning like a true professional trader. The second idea is directly tied to events in the Middle East and expectations of a major global crisis. I also expect its implementation in the second or third quarter, and the potential here is up to 50% on average. We're talking about metals. Each of them, platinum, palladium, silver, gold, I expect them to reach new all-time highs. All that's left is to choose which metal to give preference to, and where exactly it's worth entering. And then you also switch to the chart, so that you can see for yourself. We will now look at both gold and silver, and you will draw your own conclusions about which asset is more interesting for you. In front of you is the daily gold chart, showing the period from 2023 and how the entire trend has been developing and why it is not yet over. There are a number of indicators that I pay attention to, and these are the key factors for me. The first is the MACD indicators, which show the divergence between price and volume on the market. And at the moment, we have no divergence at all. What does this mean? During the development of a typical standard impulse, the third movement usually always reaches the extreme, and during the formation of the fourth wave, we always see a reverse divergence. That is, over the course of the entire cycle, the entire trend, we see an extremely minimal value of the indicator, which points to the likelihood of continuation. The second way to determine targets and, let's say, the potential of gold is by using Fibonacci retracement. The standard ranges are 23 to 38% if the correction is what's called a squeeze, meaning it's weak, and essentially just a consolidation before continuation. Right now, this is exactly the kind of correction that is forming in gold. That is, most of it is located in the range between 4,430 and 4,875. And as the current third wave completes, we move on to update the highs. At the moment, the nearest targets that will come after the correction is complete are 5,800 and 6,500. Accordingly, in this case, we have a growth potential, let's calculate it, up to 48% for gold. The third method that allows us to monitor what exactly is happening in the market right now is the use of skewed forks. And here we have exactly the same setup that I showed you in American stocks and which I will show you a bit later in idea number 1 in the third asset, which will be the most explosive, the most interesting for trading this year. So we can earn up to 50% on gold as the correction comes to an end. Your task is to monitor when it ends and gradually, in parts, start building a long position. At the same time, under no circumstances should we let gold fall below 3,700, otherwise the trend will be broken. Now let's talk about silver. Why might silver turn out to be more interesting for us? The thing is, the structure here is exactly the same, but the subsequent correction turned out to be more significant. We tested the 62% zone. This is a kind of limit for forming the fourth wave, and essentially only a small false breakout is allowed here if this entire pattern is coming to an end. I want to remind you that just a couple of minutes ago when we were talking about American stocks, I mentioned that a breakout of the trend line would serve as a basis for us to consider buying, and in fact to use this method for subsequent entries. Right now we are between two accumulation zones, and an upward move would be evidence that this correction has come to an end. So let's get back to the targets. Last time we had a slight update of the minimum. Our minimum targets are 130 and 158. To put it in perspective, with the current price, this potential is much more significant than in gold. The minimum target is 90% and the main target is 133. Just imagine, with metals, a conservative asset that most people generally consider a protective tool for their investment portfolio, you can speculate and earn up to 100%. In my opinion, that's a really cool idea. Write to me right now in the comments which of the ideas presented, there have already been 5 so far, appeals to you the most and seems the most promising. Which of these ideas are you ready to make money on in the near future? And the cherry on top in this video will be my number 1 idea, directly connected to the Middle East. It's oil. But it's not as simple as it might seem at first glance. In the near future, I expect some more convulsions from Trump and his team, in an attempt to get out of the conflict in the Middle East, but I'm sure they won't be able to do it anymore. And while he continuously keeps on trying to utilize the strategic petroleum and oil reserves of the United States and various other NATO member countries, while he repeatedly claims a decisive victory over the nation of Iran, for what is essentially the 20th time now, he tries to negotiate, I expect a very good correction in oil prices. In other words, the realization of those very targets everyone is talking about, $130, $150, $200 per barrel, will happen. But that will happen later, after all attempts to reach a peaceful agreement have been exhausted. That's when the ground operation will begin, and that's when the real war will start. Let's move on to the chart. Currently, the price of oil is forming a clear triangle pattern, and it appears to be just one final downward move short of completion. We are looking for one more significant drop down to the $82 per barrel mark in order to fully complete the long-term correction that has been ongoing ever since the year 2008. Given that we have a triangle here, I want to show you a little trick, actually 2 tricks, that allow you to trade triangles as accurately and effectively as possible and to assess when they will end. As I said, I expect this idea to play out in the 3rd or 4th quarter. And now I'll explain why. In order to determine when the triangle or range will end, we need to draw guidelines between points BD and AC. This gives us what's called the apex point, and then all that's left is to use a ruler to mark out 2 zones. 66%, that is 2/3, and 85% of our interval. Within this time frame, I'm highlighting it for you right now, we see the conclusion, meaning the end of the correction, the realization of all parts, and the end of all peace negotiations that I mentioned earlier. Yes, including Trump's convulsions, which he will try to pull off. All of that will come to an end in August. After that, we can expect significant growth. The second key point is the use of shift pitchforks to control every subsequent movement. Look closely at the chart. If we are developing a triangle, then all our movements fit within the channel of uncertainty, that is, within the median channel, inside which the price is formed. Accordingly, the first movement, movement C, is formed inside the pitchforks. Next, we draw the next set of pitchforks, and at the 50% median at the midpoint of our construction, we get the completion of point D. That's the current level, and all that's left is to determine the final ultimate target of this entire process. That is, this is exactly the 81 mark, or the range from 86 to 70. That's where it makes sense to look for signals so that we can join the oil rally as accurately and efficiently as possible. If we consider the 80 mark as the main entry point, then the minimum potential for oil is 113% from our correction. That's the level of 164, or a 100% increase. But if we add the next one, that is 162% and a price of 228 for oil, in this case we get a potential of 180%. I constantly trade similar short-term and medium-term ideas. I share my notes and thoughts on my channel. So, if you like this video and my ideas and you plan to use them and they seem promising to you, subscribe to my channel so you don't miss important information. On my channel, it's all about how to make money on the stock market and do it consistently. No fluff or nonsense. That's all from me. Good luck.